If you've decided to buy a home, but you've also been watching a lot of HGTV, you may have decided that a fixer-upper is the route you want to take. And what they don't tell you on those flipping, fixing, dream home type shows is that you can't use a regular mortgage to buy and renovate these fixer-uppers, but you can use a 203K loan. So a 203K is an FHA loan that allows you to buy and renovate that house. This video is just talking about the process of the full FHA 203K loan. This is similar to the limited FHA 203K loan and the conventional renovation loan, but there are some differences and I will have some videos about those, so please stay tuned for those. For now, we're going through 10 steps to a full 203K loan. So step 1 is you are going to get pre-qualified, just like you would on any other home loan. We're going to look at your credit, your income, your assets. The amount that you qualify for in this case is going to be for the purchase price plus the cost of the renovation you're doing. This is your renovation budget. This is anything that has to do with the renovations, including a cushion. I will explain what that cushion is a little later and how we calculate that. So for instance, let's say you qualify for $300,000 and this payment fits in your budget. You need to look for homes that are significantly under $300,000 so that you have the money for the renovations included in that total. Now you'll find that the numbers will change as we go through the process because we're only estimating the cost of the renovations to begin with. Step 2, you find a house and put it under contract. This is going to take some patience, some imagination, some vision. Real estate agents are great at this. You'll be working with them to find a house that has the potential that you're looking for. If you want to limit your renovation budget and your renovation time, then look for homes that don't need as much work. But if you're willing to take on a larger project, you can look at uglier homes. Now you have to keep in mind what your total budget is during this process. So for instance, if you are keeping that same $300,000 pre-qualification amount and you're looking at $250,000 houses, you'll have $50,000 to work with in your renovation budget. But if you're looking at $150,000 homes, you can have a bigger renovation budget. Your real estate agent is going to be a big help in this part. They're looking for houses that fit your needs in a really big price range. They're looking at the price of the house and the estimated cost of the work to make sure that that total still fits in that budget. They're also making sure that the house is worth what you're paying for as is, and they'll estimate the value of the home when all the work is complete. So if you're buying a home for $250,000 and you're putting $50,000 into it, you want it to be worth $300,000. Step 3, now that you have a house, you'll need a HUD consultant. This is a person who has been approved by the U.S. Department of Housing and Urban Development to oversee these FHA type loans. A lot of lenders, including my company, require that we use HUD consultants for conventional loans as well. They'll need to inspect the house, make sure that what you're planning to do to the house is feasible, and if there's anything else that needs to be done to the house to bring it up to compliance, they'll want that included as well. By that I mean if you're planning on doing some kitchen and bathroom remodeling, but the HUD consultant notices that you have some rotten fascia boards, they're going to require that that be added to your budget. The HUD consultant will also give you an estimate on the work that you're getting done, but it's important to remember that these are not the final numbers. The HUD consultant is not a contractor, so you can't hold your contractor to the numbers that the HUD consultant comes up with. This is just a place to get started. Step 4. Now you're ready to get a contractor proposal. There are some requirements for the contractor that you'll want to keep in mind when you're doing your search. We'll ask the contractor to fill out a profile with information about their experience and their references. We may ask them about credit lines as well if it's a big job. They will need liability insurance. If a license is required where they're working, we'll need a copy of that. And if licenses are required for any subcontractors, we'll need those as well. I'm thinking of plumbers and electricians, for instance. We'll talk later about how the contractor gets paid. Now you'll want to make sure that they're on board with how they get paid because it's going to be different from what they're used to. In most cases, you'll use one general contractor that will oversee any subcontractors. Now that you have your numbers, make sure that the costs still align with your budget. The contractor will need to sign a contract with you for the work. There's no additional money available if the price of lumber goes up or if they've miscalculated the flooring, so these need to be realistic numbers they can live with. Once you come to an agreement, then we'll calculate your renovation budget. Like I mentioned earlier, this is more than just the cost of the contractor's material and labor. To start with, we'll add a cushion called a contingency. This will be equal to 10, 15, or 20% of the contractor's costs. This is up to the HUD consultant and it depends on the scope of work, the age of the house, the condition of the house, and if the utilities are on. We're also going to include fees for architectural or engineering work, the HUD consultant, draw inspections, title updates, permits, and lender origination. You can also roll in mortgage payments for the time that you cannot live in the house because of the work that's being done. If you have to pay for any of these up front, like an engineering fee or HUD consultant fees, this will be credited back to you at closing. But by rolling all these costs in, it means that's less out-of-pocket money that you have to come up with. Step 5. Now we're going to send a list of the renovations to the appraiser and ask for a subject to appraisal. They'll take the proposed work into consideration and tell us what the house will be worth when everything is completed. We want that value to be equal to or higher than what you're putting into it, but we do have a little flexibility on an FHA loan. We can actually go over that appraised value by up to 10%. Step 6. Now that we have an appraisal, we'll finalize all the paperwork, get a final underwriting approval, and prepare to close on your home. The contractor will need to be at closing, so you do want to get them prepared for that. Once you close, the house is yours. The seller gets paid, the real estate agents get paid, and the renovation budget goes into an escrow account that the lender manages. Don't expect any funds to be paid to the contractor up front except for limited circumstances. They need to plan accordingly. Step 8. The work can now begin. You may or may not be living in the house while the work is being done. Remember, you can finance in some of those mortgage payments if you cannot live in the house. This is up to you, the contractor, and the HUD consultant. So make sure that you talk about that when we're working up that renovation budget. Step 9. As the work gets going, the contractor gets paid in draws. This is what I mentioned earlier. This means that they get paid as work is completed. So for instance, if you're doing $100,000 in work and they're ready for a draw, the HUD consultant will go out and inspect the work that's been completed already. If they've done 25% of the total, then the HUD consultant will request that the lender pay 25% of that $100,000 budget out of the escrow account that's being held. Now, the lender will hold back 10% of that draw every time a draw is made because we want to make sure that the contractor keeps coming back. So if they need more than 5 inspections, then they will need to pay for those out of pocket. Remember that contingency that we were talking about? If something unexpected comes up during the project, this is where those funds would be coming from. So for example, let's say that we know we're replacing the shingles on the roof, but once they tear off all the shingles, they find out they have some rotted decking that they couldn't see before when they were doing their estimates. So this is where we're going to use that contingency money to pay for some of those unforeseen circumstances. Step 10. Once all the work is completed, there is a final inspection. We order a title update to confirm that nothing has come up impacting the title from unpaid invoices, and the contractor will get their final 10% that we've been holding back. Now, if there are any unused funds, usually from the contingency fund, they get applied to principal. Your project is now complete. If you want more information about the 203K and other renovation loans, please stay tuned. I'll be posting a lot more helpful information about these underutilized programs. You can also add questions or comments below and click on the link in the description to reach out. Thank you.